gold or silver position makes sense. But for investment purposes, like the actual physical commodity is what everybody wants. The whole world is shifting back to, physical commodities and physical things, and strategic natural resources are what the world will revolve around. And, we can talk about other important physical items like, you don't want the paper representation of a gun doesn't help you when you actually need a gun. You need an actual gun or whatever the tool you want to talk about. But if we actually have a financial crisis or a currency crisis or a situation where the grid goes down for a month, and the electrical system is cyber attacked by Russia or China, you need physical gold and silver in your hands. You don't want paper gold. They don't power these missiles with paper silver, right? They don't. You don't have paper silver in a solar panel. It's physical metal. You need the actual commodity. So the world is shifting towards this, and China's the best example. And that's kind of watch again the direction of where they're going. And they're, obviously they're our biggest adversary potentially, or the biggest threat to, US global dominance. China's a superpower, and this is a very unpopular opinion, but I'll share it anyway. I think we are all worse for being part of a democracy, because every 4 years the weather vane changes directions, and our strategic goals as a country are constantly being shifted from pro business to pro socialism or whatever. And it's every 4 years we're kind of resetting the agenda, and we're just going in a circle. Whereas China looks at benign dictatorship, or benign or not, that's probably an argument that can be had, but they look out 100 years. What do we need to do between here and there to become a global superpower? And they're just boom, 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 boom. They're doing it all, right? They're acquiring all the rare earth deposits. Russia's been doing this with uranium deposits and uranium enrichment capacity. We're screwed in this game of risk, which like the pieces to be had and to win and to fight over are all strategic, physical natural resources and commodities. But to, list a few things is, China's now been buying physical gold for like record levels for 21 consecutive months. They added 10 tons alone in July. They have the second most physical gold of any country in the world. We have 8,100 tons allegedly. They're nearing 2,500, but truth be told, I think they have way more than that, and they're waiting for that kind of key moment to pull back the curtain and the weather, the Wizard of Oz, and to show that they probably have 10, 20 plus tons of gold, but they're moving away
right?
from
10, 20,000.
Oh, sorry, 10,000. Right now they have 2,500. We have 8,100, right? So they probably have 10 or 20,000 tons. They bought 10 tons just in July, like I said. So this race is like an arms race, but it's a physical gold race. But they're also doing other things like, limiting the ability of people to trade paper, forcing them into the physical market. So there's more retail ownership, setting up their citizens the right way. But they're building physical gold infrastructure too in Singapore and in Hong Kong and in Shanghai. They've got all these huge vaulting networks that are now meant to settle trade in yuan or gold. China's moved away from collateralizing treasuries, which forever is what they used to do. They'd say, okay, some African country has $500 million in treasuries. We will collateralize that $500 billion or $500 million and give them a loan in yuan to develop, a mining road or a ring road or whatever electrical infrastructure that they need. And they take, ownership and percentages in that. And that again ties into how they've been able to get all these natural resource commodity rich countries. And they're like getting there before we are.
Belt and Road.
And exactly. And they've been doing that by collateralizing treasuries. They're no longer doing that. They're collateralizing gold holdings and giving them loans in yuan, which is actually going to create a lot of demand for yuan and strengthen the yuan over time as well. And then add to that, they're just working on all these other strategic settlements where you can settle trades or oil purchases or whatever in yuan rather than in US dollars, which we know with the BRICS and everything else has been going on for a very long time. So all of these things in combination point toward a world where physical ownership is 100% the most important thing. So as individual investors, we should be looking at that and saying, oh crap, what do I have in my portfolio? Oh, I got stocks. They're in a huge bubble. Most risky market we've ever seen in stocks in forever. And we can talk about this in a little bit, but the Bank of International Settlements issued a warning about a month ago saying it is the scariest market as far as the leverage behind it goes. Worse than housing in 06, worse than the dot-com in 2000. And the Bank of the International Settlements is considered the central bank for central banks. They don't issue warnings lightly, and they definitely don't sensationalize. So if they're saying this is the riskiest stock market with the most leverage behind it that we've ever seen, take that as a pretty good sign that stocks are in very frothy bubble territory. And that's not a good timing indicator. It doesn't mean it can't keep going this way for a couple of years. But my guess is beyond midterms, a massive stock market crash, worse than anything we've ever seen, and kind of a combination of all of them is very likely. And I'd say maybe we have a year or so, maybe less.
Yeah, it's like you can't talk about these things without addressing that, right? Because what's also sucking a lot of the capital out of precious metals, especially at the retail level, right? It's because you don't see these big sovereign banks investing in the stock market. You don't see, China, their own central bank is not, kind of loading up on SpaceX stocks, right? It's kind of the opposite.
They're not emotional. Yeah, they're not emotional FOMO traders. They are strictly looking after their future, either strength of their financial institutions, the financial future of their citizens, of their currencies. Like they are big time institutional investment bodies that are not very price sensitive at all, right? And they've been using this dip in gold and silver to buy a whole bunch, but yeah, I think it's the opposite with Main Street, right? You end up having people go, oh, geez, SpaceX IPO. And last I checked, I thought it was down a whole bunch. And there's some analysts saying that actually when these big IPOs happen, often they kind of ring a bell and mark the top for the actual, secular bull market in stocks. And that's what happened in 2000. And, and here's the thing is like most people's portfolios are 60% stocks and 40% bonds, or 70-30, whatever your risk tolerance is. And your financial advisor, and I think one of the worst pieces of advice that you can ever get, nothing against financial advisors, they mostly are well-intentioned, but they're just conventional thinkers and mainstream thinkers, which probably the biggest problem with all of it. They'll tell you, oh yeah, the market might crash. Yeah, sure. It'll always come back, right? It'll always come back. Yeah, sure. Maybe on a longer time frame, there are historical precedents for markets that crash by a lot and take a really long time to get back to break even. So 2000, the NASDAQ crashed by 85%, the dot-com bubble, 85% crash, and it took until 2013 to break even. That was 13 years of being in the red if you owned the NASDAQ. The Nikkei in Japan, and they had the most expensive real estate in the 1980s, and they also had the most expensive stock market in the world in the 1980s. And actually, it sounds pretty familiar because that's us right now, the most expensive stock market and real estate in the world. And when the Nikkei, or their version of the S&P 500, crashed in 1989 by 80% or 85% again, it took until 2019 to break even. And I was born in 1989. So I was turning 30 in 2019. So, 30 years to get back to break even. So I think if we see all of these risks and these bubbles and the circular financing and all this stuff behind the AI, and again, not a great timing indicator, but not a matter of if, but when it crashes, it's going to be big. And it's going to be bigger than either of those two examples likely, which means that, can you afford to have a 50 to 80% drawdown in your stock portfolio at the age of 50, 60, 70? Maybe even 80, when you could be looking at 5, 10, 20 plus years to get back to break even.
And I think so, there's an important point I want to make really quickly that kind of ties into what you mentioned there, is that I would say that the people that are watching this show are very, very awake people in many ways, right? And I applaud them. I'm very grateful for the audience. I see in the comments, it's really, really intelligent conversations. Now, but if you look at, there's a lot of people that they don't trust the system, right? And I think COVID, broke it for a lot of people, where they're like, okay, I can no longer trust the government. I can no longer trust my doctor. I can no longer trust, the media, of course, right? Some people knew it before then. But I think if you take a step back, it's like, okay, well, what is this? What is a symptom? It's like, well, there's a system, right? Whatever you want to call it, the cabal, the elites, there's a system. That system, the same system that educates us, to be factory workers and to, shut up and raise your hand, and, the same system that has conditioned us to become what we are today, right? Which is a much, much weaker version of, I think, what it means to be human, what it means to be an American, right?
Agreed.
That same system is designed to keep us poor, to keep us distracted, to keep us busy scraping by. So we never realize it's the system. So we never fight back against the system. And I think there's a lot of people that, especially now, they would never walk into their doctor's office and say, hey, I'm worried about getting the flu. Can I get that new mRNA thing that you shoved my arm? They'd be like, there's no way I'm doing that because I know that doctor is being paid by Big Pharma and everything. However, a lot of those same people will still walk into their TD advisor, to their Vanguard advisor, and they'll say, so where should I put my money at? And they're going to say, hey, we should put it into these stocks and these bonds. They're never going to tell you that you should be investing in precious metals. They're never going to be telling you that you should be, hey, Seth, pull your stuff out of your stock portfolio, go buy some land. You know what I mean? It'd be the equivalent of you going to your mainstream doctor and him saying, you know what, instead of that new mRNA shot, I think we should give you some turmeric and some oregano oil to help boost your immune system, right?
My thing on this is you never go to a Ford dealer asking them what Chevy you should buy.
Right? Yes.
It's like, what? Are you insane? What do you mean?
Yeah.
You don't go to your financial advisor asking him, what was the best way to protect yourself from what's coming in.
But in the same way that the doctors are trained by the medical schools, which are owned by the big pharmaceutical companies, it's like, do you think that the same thing isn't happening in finance, that your CPA or your vet investment advisor, they're going to the same version of the schools that the doctors are going to, and their schools teach them how to make sure that people keep their wealth into a system that the elites have complete control over. And so when they want to flip the switch, when they want to collapse the market, when they want to do that, they come, they reset it, they shake everything up. All of a sudden, your net worth is now 10 cents on the dollar from what it was a year ago, and they are scooping everything up. And so I think it's just an important point for people that have a lot of money sitting in the stock market.
Exactly. And the architecture of the things that happen, right? Like with COVID and, Microsoft or whatever filing patents for, data collection, and essentially, talked about this on another show. Essentially the technology that would be behind a social credit score that was filed.
Microsoft's patent is patent 060606.
Exactly.
It's the patent for basically mining crypto off of the human body's energy production, right? It's a very Matrix-esque dystopian thing.
For sure. And big, government institutions and central banks and big finance and big media and big this, and they're all kind of in on what they're working on, what the kind of sequential, series of events is going to be that leads to a final boom, bust, crisis, or whatever. And they already know what's coming on the other side of that, right? COVID, we want to vaccinate everybody. They engineered it, total fabricated event, total bullshit disease too. The thing that they screwed up was they didn't get it right. They didn't actually make one that was bad enough to scare enough people.
I agree.
Get it going. But so with this, it's like, well, what do they want on the other side of this? Social credit scores, digital currencies, total control, tyrannical
tokenization.
Tokenization. Well, to get there, they have to create some kind of absolutely massive financial crisis. We've already got the makings of it with the BIS's warning. It's like, hey, the tinder is there, the wood is dry, it's been piled up, the fire's going, I doused it with gas. What's the spark? So, it'll come. It could be soon, and not to say it's going to be like tomorrow or next month. So I'm not like, fear mongering here, but you want to be prepared like 6 months early rather than 2 months 2 seconds too late. So
exactly.
The point of getting into this is the stock market's the riskiest it's ever been. Sure, everyone's still making money, but you won't know, you're not going to get advance notice before the match gets struck.
And the only way to advance notice is if you watch what the elites are doing, and they're pulling all the money out of the stock market. Buffett's sitting on his largest cash position, I think, in history, right? The bank, the sovereign banks, central banks, they're dumping treasuries. They're getting out of paper. They're getting into physical. Like, so the writing is on the wall.
Oh yeah, and they're dumping bonds. The bond market's another big thing, right? So 60% stock, 40% bonds. The bond market's crazy too, and we've seen these interventions with the Japanese yen. We've helped. We've The U.S. hasn't had to do this for 28 years. We sold euros to buy the yen so that we can strengthen the yen so that it doesn't continue to drop and become weaker. Because if it gets any weaker, they're going to sell all their treasuries to, essentially support their currency. And if they sell their currency, or their treasuries, which means they sell bonds, the bond price goes down, but that means that the bond yield goes up. Well, bond yields control debt instruments and credit facilities and commercial debt in the entire economy. So mortgages, car loans, credit cards, everything is based on that. And it's already pretty high. We just had the 10-year, the 20-year, the 30-year, they all have had major rises in the yield that are at 20-year highs, 30-year highs, which means that it's factoring in massive inflation years from now. And not to get too complex with all this, but the bond market's in a lot of trouble. We wouldn't have intervened in the yen and try to get prevent the yen carry trade. And I'm sorry, that's what a lot of other people have been talking about these last few weeks since the FOMC meeting at the end of last month. It's a big important concept too, but we don't have to get into it. But all these little things combined mean we have the riskiest bond market of all time, the riskiest stock market of all time. And what are every single one of your portfolios made of? Your 401k, your IRA, it's all that conventional 60-40 model, which for the last 40 years has worked pretty well. But I'm not investing for the next 40 years by looking in the rear view mirror. You got to look at where the road is going and where the signals are leading to, which is all these things that the East has been doing and that we're seeing in broad daylight happen. It's it shouldn't be ignored by us. So obviously I'm already prepared the best that I can be. I think you are too. You've made all the changes and all the preparations to your portfolio and what you invest in, how you protect your net worth. But I think a lot of people are still extremely underprepared, very underprepared. Gold ownership, and this is in American portfolios, and this includes physical gold, ETFs, mining companies, everything precious metals related all together is about half of 1%.
It's crazy.
While 70% is in stock, which is the highest concentration of all time.
By design, right? Yes, I think that the one last, there's always more, but one of the last kind of components of my own kind of preparedness, stock up is I've been kind of looking for a 1980s, vehicle that I can buy, something that, is going to be EMP hardened. I was just looking at, there's they did a military version of the old Chevy K5 Blazer, and it's got a diesel engine in it. And it's the military spec. I just found one that's been completely restored. So I've been looking at okay, I need to get one of these vehicles that I can fix myself. It's not going to get wiped out with an EMP. So
that's actually something I haven't even really thought about. I've got all the other stuff: guns, ammo, food, water. We grow and eat and chickens and goats and sheep and getting pigs this fall, which should be fun. But I haven't thought about that because all the chips in your car would get fried in the EMP and you couldn't go anywhere, right? So
exactly.
These old, and I think there's you see these phones that are coming out now where it's no screen. They're new and they look cool, and you can text and
flip phones oftentimes, right?
They're like the no doom scroll new things, right? And it's that's where things are going now. It's less technology and stuff is actually where people want to be and simplify things again. I think a car that is hardwired, no chips, no dials, no digital, just pure analog everything would be actually pretty cool. A new, modern something like that would be neat. But
yes. I mean, I guess you so looking at the whole picture, what I'm seeing is okay, we're seeing that silver and gold. Again, no one has a crystal ball. Actually, I don't have a crystal ball. They've got a crystal ball because they're controlling these things through their own decisions. But it's everything looks like it's kind of playing up for a big spike, right? And that's one aspect of this, right? It's that it's for the same reason that I was buying like crazy when silver was at $40-$50. I mean, I added a lot of silver to my portfolio because I saw the writing on the wall. I think that we're in that again, so that's one thing. But the other thing is that, and just being very sober with whoever's watching and listening, It's like if you've got the vast majority of your wealth, if your retirement, your nest egg is sitting primarily in stocks and bonds, right? And this isn't without even looking at, okay, hey, if I buy silver at this, what if it, can it double and I make all this money? It's about preserving, right? Obviously, it's great if you buy silver at $65 and, within a year it's at, 150. That's amazing. But what's more important to that is it's an insurance policy, right? And that's the key, right? Because you're right. This warning from the BIS, like this is not something just to write off as like, oh, another kind of fiery, doom-based thing. I'm seeing everywhere.
But no one talked about it. No one, almost no like mainstream. It wasn't on the news. It was, obviously this is a Reuters article, but it just kind of went under the rug. But I agree with you. Look, the first and foremost reason to buy precious metals is as financial insurance. It can never go to zero. It is out of every currency. It is outside of the banking system. It is your wealth in your hands in a format that basically has lasted and will continue to last for thousands of years. Always viewed as the tier one asset by everyone in the world throughout, again, 5,000 years of history. It's not going anywhere. So as a defensive play, gold and silver are just the safest thing to do. But in the right conditions, they're also where you make the most money at the same time. So you have the double whammy of nothing's safer and nothing's returning better, or nothing's getting bigger returns. Now, we did see that, again, 30 to 120 in 5 months. Where else can you get a 300% gain in that? Now, that was only if you were trading it, from the bottom to the top perfectly. No one does that. You own gold and silver as insurance first. You'll own it for many, many years. But I have, price targets I'm pretty sure that I've shared on this channel. Mine are extremely conservative compared to some others. I think, in and around 2030, because we still have a long time left for this market crash to play out, for the ensuing recession to play out, for the ensuing monetary intervention and money printing that we haven't even talked about. Like, we saw a big print in 2008. We saw a big print in 2020. In 2020, they created $9 trillion out of thin air in 1 year. When the bubble pops and you've got most expensive housing, most expensive stock market, and both of them are free falling and bonds are free falling, where's all that capital going to go? And in 2008, when the stock market popped, it crashed by 50% over the